Understanding work in progress is foundational to running a firm. To define work in progress, it's work done, not yet invoiced. So we can look at this from a very basic level. It's the value of work done that hasn't yet been invoiced, but there's also a formula that we can look at that looks at the movements of work in progress over a period, and that's what we're going to look at shortly. But let's just focus at the moment on the most simple form of work in progress. So let's say I'm going to do some work for you. I'm going to do a tax return for you, and my billable rate is $100 an hour, and we agree that I'm going to charge you $100 an hour for the service. Now, if I do 5 hours of work, we can say that I've accumulated $500 of work in progress. This is an asset to me, and I can exchange at any point for an invoice with you, which you'll pay for the work that I've done. Work in progress can be expressed as a formula. So at a very basic level, it's work done, not yet invoiced, but we can look at this over a period to understand what our movements are. And that's really relevant when we're looking at lots of jobs and lots of clients. Right, so the formula is opening work in progress, or abbreviated to opening WIP, plus time, plus disbursements added, less invoiced, plus net write-ups equals our closing WIP. Now, disbursements added is anything that isn't time related. So that could be a filing fee, it could be travel, it could be accommodation, anything we accumulate that is a cost that we're going to on-charge to the client that isn't necessarily time. So that's the formula here, and let's add some numbers. All right, so let's say that this is April, right? So we're going to start this job in April. So we'd start with 0 opening work in progress because we've done nothing. We add $400 of time, which is the 4 hours at $100 an hour, which gives us a closing WIP balance of $400. Now, let's say that it's now May, so it's the next month. Now, we're going to have an opening WIP balance of $400 because that's work we did in the previous month. So when we run this report, we can run it for a month or a week or a year or a quarter, whatever it is. But let's say we're running it for May now. We run it for May. We say at the 1st of May, we opened up with $400 of work in progress. And then we would then have $400 of closing work in progress. Now let's say we do another $600 of time, so another 6 hours. So then we'd see $400 of opening WIP, time added is $600, giving us $1,000 of work in progress. So as you see, we've added the WIP from the previous month to the WIP in the current month, giving us $1,000. Now there's only 3 things you can do with work in progress. You can leave it, you can invoice it, or you can write it off. Those are only 3 options. So in this example here, let's say we invoice it. So we've got the opening WIP of 400, we've got the time added in this period of 600, and we've invoiced $1,000, which is represented as a negative because we want to add along this line to arrive at our closing WIP. So we arrive at 0 work in progress. So what we've done here is we've exchanged this work in progress for an invoice, which is later going to become cash in my bank account. Now I have no WIP. Exchange one asset for another. All right, so let's say it's May already. So we know what happened in April. There's $400 of WIP. Now in May, we're going to have $400 of opening work in progress, and then we add $600 of time like we did before. But let's say there was an agreement we had where I said, look, I'm just going to charge you $800 for this job. So I've put $1,000 of time to the job, but I'm only going to bill $800. So then when I send an invoice, that's for $800, so negative $800. So we arrive at a closing WIP balance of $200. Now we don't want to hold on to this $200 because I'm never going to bill it. So that's where we want to write it off. And then what we'd see is opening WIP 400, time added 600, negative 800 for invoiced, and then negative 200 for our write-off, giving us 0 work in progress. So let's look at another example, right? So let's say rather than quoting you $800, I quoted you $1,200. So under this situation, we'd have the $400 of opening work in progress. We have the $600 of time added. We then invoice $1,200. So then we end up with a negative $200 closing WIP balance. So what we want to do there is we want to do a WIP wash up again, where we close the job out. So how this looks is we then have a positive $200 value in our net write-ups, which means we've got a write-up on this job, which means we managed to invoice more than the work we did. This is a positive thing. So if we add along those lines here, we arrive at 0 work in progress again. So we've closed this job out. Now we're going to look at one more situation here, which is going to look at negative WIP. So positive WIP is any time or disbursements we add, where negative WIP is any invoices. So if we've done no work and we just send an invoice for the job of $1,200, we're going to accumulate negative work in progress. And as we do our work, that negative balance drifts down towards 0. Cool, let's look at this. So in April, let's say we opened with no work in progress, no time added, and then no disbursements, and then we sent an invoice for $1,200. We'd recognize this as negative $1,200 of work in progress. So we close out at negative $1,200. In April, we add our $400, which means we then have a negative $800 closing WIP balance as we roll into May. In May, we have negative 800. We do our $600 of time, which closes us out negative $200. And finally, when we do our WIP wash up and close the job out, we'd have a $200 write up. Again, positive, giving us $0 as our closing WIP. So what we've just looked at the WIP formula, and this is very, very important, and it's going to become more and more relevant as we start fleshing this out further. But that's a really important formula to understand because it looks at a certain period, because you have opening WIP balances and you have closing WIP balances. We're able to look at where the movements are within that period. And what gets really interesting is we can start analyzing things like write-offs, revenue. We can start bringing some more values in to start building up a story of what's happening in our firm. But it's important to understand that work in progress is work done and not yet billed, but we can also have billings with no work done, which is negative work in progress. Now, if you found this video useful and you'd like to see more of these, you can subscribe to our YouTube channel, as we are going to be pushing out a lot of content around this. We've only really just scratch the surface of a lot of these concepts, and there's so much more. Think of it as the tip of the iceberg. There's 90% is still below, and I want to explain all of that. So head along and subscribe to the YouTube channel, and leave me a comment under this video of the part that you found most useful. And if you do have any questions, drop that in the comments as well. My team and I do read all the comments. That helps us create more practical and useful content for you. So thanks for hanging out, and I will see you in the next one.